Hey everyone, it's Evan here from the Trade Risk on Friday, March 16th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So first things first, SPY did go ex-dividend here on Friday. So those charts that you're looking at look a little more skewed to the downside than they really should. And no, the S&P 500 actually did not close negative here on Friday. It did close positive. The SPY closed negative because that is an ETF that pays a dividend. About a dollar and a quarter, I believe, was the payout today. So do make note of that when you're charting your short-term levels, particularly you intraday traders or very short-term tactical traders. Recommend kind of looking at the cash market, cash settled market. SPX will show you sort of the proper supply, demand, and nearby levels. Stocks all week basically inched lower, retraced, very slow, gradual sort of drip lower across basically the entire market. We had some sectors outperforming and some underperforming. We'll talk more about that later in the video, but for the most part, we basically have semis and tech that are still holding up, best-in-class leadership groups. There's actually a new one that sort of is emerging right now that had some nice relative strength this week. We'll talk about that later in this video as well. So stick around this week's weekend stock market recap video. All right, let's jump in here with the S&P 500. We're looking at the cash market right now because of that ex-dividend. So what we see here is a daily chart right now. We're going to skip right over and go right to the weekly chart of the S&P 500. You can see we did finish lower, 1.05%, about 30 handles, 29 handles to the downside here in the S&P 500. What we also notice about this weekly candle is notice the range compressed this week. It wasn't a very wide range like we've seen the past 2 weeks. And notice and that makes sense. We saw the VIX sort of contract this week as well. So it helps sort of coincide with the ranges that we're seeing day to day. And also notice that we did have a slight outside bearish reversal week. That means essentially that we tried to push up above the prior 2-week highs. We actually opened up just slightly higher here. We tried to push up. We failed. We went back to flat and then moved red on the week and closed down towards these lows. It's not the end of the world, but it basically puts a pause in that upper level strong momentum. We'll talk more about that when we look at the daily chart. But as we like to always sort of reiterate here on the longer term time frame, depending on how you're approaching markets, the longer term trend here of the S&P 500 remains bullish. We are above all major trend lines here. We are above all major rising moving averages. We are now closing below the prior 2-week highs, but once again still above a rising 8-period EMA and very much in some sort of consolidation or maybe a slight inch higher here back towards these highs. We had on the S&P 500, we had our outer ranges drawn here where the all-time highs made around 2872 and then the recent lows actually a little bit not as recent anymore, but about a month or so ago, back in early February, we had these lows down here right around 2530, and you can see we're starting to make our way back up towards prior highs. So that's the landscape there on the weekly chart for the S&P 500. Here's what the daily looks like. It was a very slow, kind of muted week that we saw trading out of the broad indices and stocks in general. Essentially, we opened up the week right here on Monday and we tried again. We tried to push higher. We failed, closed red on Monday. And then on Tuesday, we came right back at it. Bulls started with this gap higher to start off the day on Tuesday, had a little more enthusiasm. We cleared Monday's highs. We cleared the prior 2 weeks highs and it was very short-lived. Sellers kind of came back. There was no buying pressure to really pick us back up and continue that momentum to the upside. We came back, turned red and closed more convincingly red and more convincingly back in this range under the prior 2-week highs on Tuesday. That led to a little more selling on Wednesday, a little more on Thursday, and then basically a slight pop, but mostly flat close here on Friday. So a fairly quiet week, consolidation, if you will, a pullback in the context of a strong move higher over the first week of March, where we started this move from about 2653 in the cash market all the way up to about 2,800 or so. So a nice, several percent, 5% move or so from this swing low to this swing high, and a retracement at this point, which would come in, my guess is around 30%. Let's see if we can use the fancy retracement tool here. And it looks like, yeah, it looks like we kind of got, we actually got as low as about a 38% retracement from this swing low to this swing high. And you can see we're starting to kind of perk up here just a little bit after about a 38% retracement. So a very standard, in fact, very healthy and bullish type of pullback, if that is all the pullback extends to. If we come into next week and we suddenly start accelerating lower, that of course would be a bearish scenario. But when we look here, let's go to the SPY here, just because I've been talking about these levels for so often that I think many of you will probably relate more to the SPY levels. But we are right back to retesting this prior 274 level. You know, if you've watched the past several videos of mine, I've been talking about this level for the past several weeks now, or this general area, but right in between around 272 to 274, we have this confluence of sort of technical indicators in here, and we also had a good amount of choppy prior emotional trading in this general range. And the way I view it is sort of a point of control for the market. It is in the bull's best interest to hold this level, respect support here, and try and get a bounce going into early next week. And again, when we kind of move this down here, we look right here, we are closing at a flattening 20-period exponential moving average here. So again, 4 days pulling back, retesting this support level or this general area right after this gap fill, I think is going to be important heading into next week. And really, this level kind of manifests itself across all different markets and indices. The Qs, quite frankly, I think are probably going to be the most important index to watch heading into early next week. This has been a leadership index here, along with the small caps, along with the Russell 2000, but technology has been strong here, and what we can see is it is also retesting a fairly significant short-term level here. This 171 was the prior all-time highs back here in January. You could see it retested it, or it ran up and made these highs in January. It failed. It started this correction in February, about 10% or so. We got all the way back up to the highs. We retested them right here back at the end of February. We pulled back off of them, found a higher low, found some support. We broke back through those levels, the two failures here back on the 9th with this gap and go bar, and now we are back to sort of retesting this level. So again, it is in the bull's best interest to defend this general point here right around 171 or so. Note we do have an open gap this Friday, this gap and go breakout day. This gap has not yet been filled. It would fill down around 169.86 or so, so about a point, a little over a point and a half or so from the closing print here on Friday. So one possible scenario is maybe we have one more sort of shakeout, one more weakness day where next week we start with a gap lower, or maybe we start with a flat open and a trade down, fill this gap in here, shake out some of the final week longs, and, you know, frustrate the bulls, let them throw in the towel, and then we do sort of a 1-2 step and then break back above this 171 and resume the trend to the upside. Again, it's not a scenario that has to happen. It's just a possible scenario to think about heading into next week. Essentially, what we don't want to see here, if you are bullish, if you want this trend to continue, is you do not want to see an expansion in range. You don't want to see volatility start to expand around these levels and acceleration start to come through in here and start to trade back below and close below this 171 level. That would suddenly give us the impression that this was perhaps a false breakout here, and something that could, you know, kind of get the pendulum swinging in the other direction, and suddenly we start to manifest ourselves into a bigger sort of pullback or retracement. So those are basically, you know, a couple of the different scenarios there. The Qs, I think, are important to watch. The S&P 500 is at its own sort of, you know, kind of pivotal line in the sand here. And generally speaking, though, again, not to make it sound super worrisome, but, you know, when we look at this market, again, let's keep it in context. The NASDAQ 100 here just finished a run from this day here from the 2nd of March, which started or had a low point of 161.96, and we got all the way up to 175.21. So we had, you know, basically a, what is that, a 20, I already forgot what the heck level this was. An over 10 point, what is that, about a 12 point or so rally here in the Qs. And now we've given back about 2 or 3 points of it. So when you look at this type of pullback, it actually looks pretty darn healthy in the sense that light volume pullback. We had a little bit of an uptick in volume here on Tuesday, but basically Wednesday, Thursday, Friday, kind of light volume meandering around right at this upper level support. This looks like it could be a innocent sort of healthy looking pullback and retest, which could ignite back to the upside. So keep that in mind. Don't think that this has to break down. This has to end badly here. This could be a very healthy and sort of textbook pullback retest of this prior breakout level. So that is the NASDAQ 100. Really, I think that sums up the market environment overall. We can look at the IWM here again. Just take a look here. The last impulse leg from basically 148.44 all the way up to 160, retested these prior highs from January, pulled back 3 days, trying to get going today. Good volume coming in, still above a rising 8 and 20 period moving average. So make no mistake, I think the bulls here are still in control across all major averages here. We are above, actually that's not entirely true. The IWM, we are above the 8 and 20 period. The Qs barely closing right at that 8 period EMA, and I know the S&P 500 closed below it, and it is in a little more of a tough shape for the S&P 500. So this one is really where it needs to get its act together heading into next week. So that, I think, really sums up the market environment. I think we have a good we have a Monday that we want to be assessing pretty closely as how the market reacts to these nearby levels, and I think that'll set the tone for the week. Again, we can pull back further, but I think if we want to keep this market as healthy, as bullish and as much momentum pent up here as possible, we want to see these upper level levels hold for that ideal sort of bull case. So that, I think, covers the market environment. Let's move into some other markets here. TLT getting a nice pop this week, 1.61% to the upside, resolving 5-6 week highs here. If we look back at the daily chart, we are now above a bullishly aligned 8 and 20 period exponential moving average here. Again, you know, from a intermediate term technical structure, the bulls certainly have the work cut out for them here. We are going against the grain, particularly on the weekly chart here. If we look at a weekly time frame, you can see very much bearishly aligned 8 and 20 period exponential moving averages sloped lower above price. That is not a tailwind for the short-term trend, but we were fairly oversold here in this range. We had covered a lot of ground to the downside, so this snapback, this retracement, this counter trend rally could have some more fuel in the tank. So let's respect it. Let's see how far the bulls can get here into next week, but so far a little bit of an upside resolve and win for the bulls. Next, if we go to oil, you can see finishing the week strong, 1.7% to the upside, which put us into green on the week. This was trading in red territory, and if we look here at the daily chart, nice uptick in volume on Friday on this move higher, 1.7% to the upside, breaking above this trend line here and clearing above these fast moving averages. So some good constructive action here late in the week for oil. Let's see if the bulls can get a follow through day and really start to confirm this move, which could get us, you know, an eventual sort of retest and continuation of this prior bullish trend. So nice development there in oil. Natural gas, not so much this week, down 1.14%. And if we look here at this weekly chart, you can see we've been crawling higher in this sort of flag, in this channel, if you will, to the upside. And it was really on Thursday where we saw this expansion in range and this breakdown. Really, it was a combination. It was Wednesday with the gap lower, and then it was Thursday with sort of the follow-through day. And Thursday is the day that we did put on a short in natural gas. So we do currently have this as a short position now. And if I can kind of straighten out the charts here to see this a little bit better, let's go down to a let's go to a 2-hour. That might show the picture a little bit. So basically here, what I'm looking at, let's get the MACD out of here. All right, so what I'm looking at here for the natural gas short is basically as we broke this trend line, which extends all the way from the lows back in early to mid-February up to recent prices. We broke below that trend line. We also broke below this horizontal level right around 2270 or so. This has been a significant level going all the way back to really the end of 2017 here. There's been some significance. We've seen some gaps around this general area, and you can see we broke below that. We broke below the 8 and 20 period moving average. So for us, it was just a breakout trade, breakdown trade to the downside. So we do have some short UNG, fairly tight stop. Basically, if this reclaims 23 for sure. If it starts to rally back above 23 or so, we'll call this trade a loss and move on. But for now, we'll see if we can get a little more follow through to the downside heading into next week. We did see an uptick in volume there on that breakdown on Thursday. So we'll see if we can get some more follow through. $23 or so would be the stop for this short. Next up, gold. So gold is another one that we still do have this long position in. If we go to the weekly chart here, not the most pleasant performance this week, down 75 bips here, getting very close, getting back to this significant support area that has held throughout all of 2018 here in GLD. And if we go back to the daily chart, you can see here once again getting a little bit of a reaction and pop here on Friday, trading down to 124.23 or so intraday, and then rallying about 35 cents into the close here to close off of the lows, but still red on the session. So for GLD, if you recall, this was the entry day here back on Thursday's reversal when the bulls stepped in and defended the support area. And right now we are back to that level. So for now, I'm still going to give it the benefit of the doubt. We are still holding above this area, but if we start to see that expansion lower here, if we start to see an acceleration lower next week below this level that has been supported here in GLD, then we will be out of this trade. For now, we're going to see if buyers can once again, for the fourth time, step in here, rally us back in. For now, it could be a continuation pattern, or if it starts to see that acceleration lower, then perhaps this was a distribution pattern in the making and a sort of topping pattern that is going to take us back down into the 2017 range. So GLD, 8 and 20 period daily bearishly aligned moving averages. It's got to fix that. It's got to defend these lows right in here, back above 125. Ultimately, 126 is going to be the magic level for GLD to get going back to the upside. Silver also, particularly here late in the week for silver, also had a little bit of expansion to the downside here, particularly again on Friday, 1.54% to the downside, taking out last week's lows. This was starting to firm up here, starting to look fairly constructive if this could just have gotten an upside resolve. In fact, it was the exact opposite. It was a resolve to the downside. So for now, silver back under pressure, back to challenging these lows. It also did get a bit of a reaction and a bounce off of the intraday lows here on Friday, but it's still stuck in a fairly tough spot for silver going forward. So that, I think, covers all of the major markets I wanted to talk about. So let's talk about some of the sectors. Really, we got the leadership group is still semiconductors. Take a look at how resilient this is. This is an ugly looking bearish engulfing bar here on very high volume for the semiconductors, but you can see sellers have been really challenged to get follow through from this bearish engulfing bar. We are just hanging out here at lows, but we're letting these moving averages catch up, and we have yet to make a continuation move lower. The end of week volume here in the semiconductors was extremely light. So for now, bulls remain very much in control despite Tuesday's bearish engulfing bar. We would have to break back below 108 or so to start getting some more significant technical damage here. For now, semiconductors continue to be the leadership group. Technology right behind it looks very similar to the cues that we discussed earlier here. You can see again a bit of a bearish engulfing bar on Tuesday, not as strong volume, but also just kind of hanging out on the lows here, reluctant to get that follow through and just letting some of these fast moving averages catch up. The trend remains bullish here in technology, in semiconductors. Healthcare stepping up today, or this week really, in some of the relative strength category. This has been lagging. This is well off of the highs made in late January, but just take a look at how shallow of a retracement this has been. Again, just kind of meandering here at these prior highs, kind of stalled out, but really not seeing aggressive sort of selling or retracement really creep into this sector of the market. I think XLV is holding pretty constructive above the 20-period EMA. If it can hold that line, that would be great going forward into next week. I'd be paying attention to it, and then a possible breakout back above 86.50. And the new sort of interesting resilient group here is IYT, is the transportation, Dow Jones Transportation average. We haven't seen this in this kind of in the top relative strength sectors in quite a while. This had this ugly sell-off which kind of led the market to the downside here in mid-January, early to mid-January, but it has now stabilized. It is back to these prior highs here. It is above a rising 8 and 20 period exponential moving average, and again, if we can start to get some follow through, some continuation above 195 or so, then the IYT suddenly looks like it could be en route to trend back up towards these prior highs here in January. So some constructive developments going on in IYT in a week that you certainly wouldn't expect it. And if we look at XBI here, I think another interesting candidate here. This ran right up to these prior highs here in the XBI. This is the equal weighted biotech ETF. In fact, we had a trade on this. I'm not sure if we covered the XBI last time around, but we had a trade in LABU, which is the 3X ETF, on this day here, and kind of sold off for a small gain into this rally here. I think we exited the rest on Tuesday, so it did capture a little bit of that, but basically XBI was looking at this breakout here very cleanly, moving above these 5-week cluster highs here, but then kind of ran right into resistance at these prior highs here from January, and then started to pull off. It's, again, like we said at the opening of the video, is at a inflection point here, 20-period EMA, with a retest of all of these highs here from February. If we're going to keep this holding up as bullish as possible with upside momentum in place, we want to see bulls defend this level and get some type of reversal here early next week. I think that'll be important to pay attention to. And then on the downside, we saw this sort of exceptional thrust lower here in the materials. XLB here, you can see on the week it was down 3.5%, very quickly back to last week's lows here. So from last week had this nice 4% move back to the top end of the range. Well, just as quick, we are now back into the bottom end of this range and back below a 20-period EMA here on the weekly chart. So materials on a relative strength basis look to be now in the bottom sort of echelon here of sectors. Financials also a little bit under pressure. It looks, fairly similar to the S&P 500, a little bit more exaggerated to the downside this week, though. 2.79% sell-off. You can see basically gave back 50% of last week's range, closed below the 8-period EMA here. And again, at a fairly important inflection point, we want to see this hold exactly where it is now. This is where it put in a lot of prior supply, a lot of prior trading and chopping around in this 28.75 to 29.25 zone. So we want to see it hold in here. Otherwise, this has, becomes very vulnerable to sort of retesting and moving back down towards those prior lows. And then finally, staples under pressure this week as well, 2.5% to the downside. We in fact took out last week's lows and sort of almost bearishly engulfed. We did bearishly engulf by textbook definition the last week's trading bar. That means we opened up higher than last week's highs and closed below last week's lows. So we do have a bearish engulfing weekly XLP bar in play right now, and it is a fairly vulnerable place at which it is occurring. It is kind of looking over a ledge here. This has been prior support from 2017. Let's see if we can get some support. If we can get a third stave around this $53 level for XLP, it does look like it is vulnerable here heading into next week. So that is all I have for this week's video. Hopefully you guys made it through the chop, the pullback this week. Pay attention to Monday's session. I think that'll set the mood of the market. And as always, thank you so much for watching. Do subscribe to our YouTube channel if you like these videos every Tuesday and Friday. Enjoy the weekend and talk to you on Tuesday.